But basically, what you've had is ever since we pierced that initial pierce of the 2017 highs here, we've seen Bitcoin kind of go up a little bit, come down, up, down, and basically going sideways to slightly higher. So I'm inclined to think that in the near term, we continue to see that price action. I kind of expect one more move up here, maybe in the Bitcoin chart, hitting 25,500. There's a small chance we could get up to resistance at 28 and change. But ultimately, I think that later this year, when that shoe drops, that the Fed can't save the day and it causes a big risk reduction, right? You have a risk off environment. We know that Bitcoin goes down in a risk off environment. Once the stock market investors realize that, it's going to filter through to crypto. And I do think there's still one more leg lower before we finally get a bottom. And I'm still pricing in really a target price of around $13,000 to $12,000 on that next flush.
Hello and welcome to Money Talks. In today's video, Gareth Soloway, who is a popular Bitcoin analyst and the chief market strategist at inthemoneystocks.com, updates about Fed's decision to increase interest rates, rising inflation, and the chances of a recession. He also gives a Bitcoin price analysis and shares the next possible moves of Bitcoin according to the technical charts. Make sure to stick around to the end of this video where Gareth Soloway predicts about the next major Bitcoin flush in November or December 2022, and also reveals why we finally see a Bitcoin bottom coming soon. So without wasting any more of our time, let's dive right into the video.
You know, the easy way for us to tell is to look at this channel, right? So see this upsloping, the bottom line, that's kind of keeping price in check. As long as price stays in here, I think you favor neutral to upside, maybe here or here. But if you break this line, this is a definitive trend line connecting all these lows. That's where I think you start to flush. You'll probably get a small bounce at the previous 2017 high and then eventually break through that. So I think, again, yeah, short-term neutral to positive on Bitcoin from here. And then again, later this year, you got to expect one more flush out. And it probably will be the nastiest and the worst in terms of fear, because always the end of cycles are the scariest, right? Where things, imagine seeing Bitcoin at 12 or 10,000, everyone's going to start to doubt, like, will Bitcoin survive? Can it survive? That's when you actually, as an investor, need to start thinking about really buying into it.
Bitcoin goes into another key macro week in the United States with a welcome break to the upside. After avoiding a now familiar breakdown around the weekly close, Bitcoin is surging higher to once more tackle resistance in place for 2 months. Can the bulls win out? Momentum appears to be strong across crypto, but a host of potential stumbling blocks lie in the way, with fresh US inflation data due, and the macro picture could yet upset the status quo, while sellers likewise show no sign of budging to allow reclaim of levels above 25,000. Amid continued claims that Bitcoin is enjoying nothing more than a bear market rally, Gareth also takes a look at the state of the play on the market as the new week begins.
Yeah, so I think the narrative right now is, and what's interesting for me is that you can see the kind of the angle on Bitcoin's been very sideways to slightly up. It's not been vertical bouncing. And I think part of that, and what's interesting is if you look at the NASDAQ's really ripped up, and those usually coincide. So a lot of people have been saying, well, why hasn't Bitcoin had a big move up like the NASDAQ instead of just going slightly up sideways? And I think the answer there is that, with Celsius and Voyager and all these other ones, you have a lot of money that's just scared. Like, who wants to put their money in with these brokers and be in crypto when who knows what the next shoe to drop is, which broker is going to go under, which one's going to file for bankruptcy. So I think that's kind of keeping a lid on the upside price in Bitcoin as well. But I think later this year, that narrative is going to shift to that panic sell-off. And I do think the final flush out will be something major. I don't know if it's Michael Saylor and MicroStrategy's finally throwing in the towel and dumping their Bitcoin at like 10,000. Maybe we see a bigger broker go bankrupt. I mean, all these possibilities are there, but I do think more is going to happen before you get an ultimate bottom.
Unlike recent weeks, Bitcoin allowed traders to breathe a sigh of relief at the August 7th weekly close. Instead of declining at or immediately after the candle close, Bitcoin instead began gaining, and these gains including an impressive hourly candle which saw almost $500 at it.
Yeah, so if past cycles are any indication, and I can show we can go to the 2017 cycle here. So what's interesting about the 2017 cycle is you kind of had this period where we had the big dump out, and then you had this lots of chop for a while, which could be what we're doing right now. I'm not sure, but that would make sense if it were to go till like October, November, and then you had this final flush out. And then notice how it took a while for it to kind of digest before finally starting to make that next move up. So again, if you look at this final flush, it kind of bottomed out in December of 2018. And then the next move up, you could arguably say, kind of started in April. So my guess is you have about 6 months of chop around the lows where you have people that are saying, this is the worst. And then you have people that are nibbling, maybe smart money starting to buy down there. And you get that kind of exchange where neither side is winning. They're just exchanging shares from people that are fearful with people that are buyers and saying, okay, this is the right time to accumulate. So my guess is, yeah, you'll see usually bottoms, you'll see a lot of chop as the bottom is made.
So it's safe to say you will be shorting.
Well, so this is actually really interesting, and to be clear, like if there's one thing I know, it's that it's very hard, and it's very hard for me to pick exact bottoms, right? So like when we were down at 19,000. I basically announced that I was going to be buying my first HODL position out of a multiple, right? And the idea there is that, I basically in my head, I love Bitcoin long term. I'm such a big bull long term, even though it doesn't seem like that. I'm just a chart guy. So if it tells me it's going down, I have to go with that. I can't, make believe. So basically in my head, I'm like, okay, I'm going to put X amount of money in Bitcoin as a HODL position at some point. And at 19,000, I put like 1/6 of that to work. And the idea there is that basically I do believe it's going to go lower, but just in case it doesn't, I do want some skin in the game to participate on that upside. So basically 1/6 in at 19. If it dropped another 2 to 3,000, I do another 1/6, another 2 to 3,000, another 1/6, basically dollar cost averaging all the way down to like 10,000. And then the way I look at it is like, even if it goes to 10,000, if my average price is 15,000, and it's going to 100 or 150 or 250, like at that point, it's a rounding error, So again, I think investors need to really be aware that even the pros, it's almost impossible to pick the exact low. So why try? Just kind of generally say, okay, well, this is a good level if I have that long-term thesis. And then you just start to kind of dollar cost average in.
The main macro event in what is otherwise a sleepy summer month is due in the coming days. U.S. inflation will become top of the list of discussion topics in crypto and beyond on August 10th as the Consumer Price Index, or CPI, figures for July hit the radar. And the schedule is already ingrained in the minds of risk asset traders everywhere. While not indicative of a specific trend in and of themselves, CPI releases are reliably accompanied by market volatility before, during, and after the fact. The question on everyone's lip this time around, however, is whether inflation has peaked. After months of key interest rate increases, meanwhile, the Fed Reserve will not make a decision on further monetary policy moves until September. More broadly, the central bank is in a bind, commentators argue, being unable to hike rates much further without unintended side effects.
Yeah, so I mean, per the last Federal Reserve meeting a few weeks ago, we basically had a little bit more of a dovish Federal Reserve tone, right? So they raised the 75 basis points, which is what the market expected. But in the conference, it was a little bit more dovish. That created this massive move up in the tech sector. We saw stocks and the S&P just rip higher, right? Now, interestingly enough, we got the jobs report this morning, right? So the non-farm payrolls came out. It came out over 500,000 new jobs. And that kind of made the markets freak out a little bit because I think the markets had thought the Federal Reserve was almost done raising, if not done, and expected a weaker jobs report to kind of confirm that they were on the sidelines. With this better than expected jobs report, I think it puts September in play for at least 25 basis points, maybe 50 basis points. And that has the market again a little bit uneasy that the Fed is just going to keep tightening monetary supply. Now, for me personally, I think that the jobs numbers are lagging. So I think that, again, you're going to see more and more weakness coming in the coming months. So maybe the Fed raises in September a little bit, but I really do believe that's it. I think that'll be all that there will be, because I do think we'll be in a defined recession. I mean, even now with the GDP numbers, you could say, yeah, we're in a recession, but the jobs numbers kind of go against that. But I do think by end of year, there's no doubt about whether or not it's a recession.
According to on-chain monitoring resources, hodlers are unmoved by the latest uptick in Bitcoin price action after months of declines. While this is nothing unusual, it remains interesting to see how long-term holders' resolve will be tested should further gains enter. In automated updates this week, on-chain analytics from Glassnode noted that the amount of the Bitcoin supply last active in the past 24 hours is declining on average, potentially reflecting a lack of knee-jerk reactions to price moves. Likewise, the 7-day MA of medium on-chain transaction volume reached 1-month lows of its own on that day, beating its previous lows from August 1st. So do you think Gareth Soloway is right about Fed's upcoming plan and recession? Tell us in the comments. Also, don't forget to like and subscribe, and see you soon with the next video. Thanks so much for watching.